Hello guys, so this is a mic test. I hope I am audible here on TradingView as well as YouTube. I'll make the necessary tests at my end. I hope I am audible here. So in my primary tests, it looks like YouTube is picking up the audio as well as TradingView, and the screen sharing looks to be working fine. If you guys are online, I would appreciate if one of you can confirm the same from TradingView or YouTube, wherever you are. Anyone would do. So I'll take a few seconds here for everyone who is going to join in from the get-go can join in. In the meantime, as I said, if you can confirm the audio, that would be really appreciated. So okay guys, it looks like things are going well audio and video wise. So one last final check. 1 second. Okay. Good evening, Madhavji. So is the audio and video all good at your end? Okay guys, so in that case, let's begin, and I'll start off with the standard disclaimer here, suggesting that all content presented here is for educational purposes only. I'm not soliciting buy or sell. If you go on to use the views presented here for your trading or investing or for any other purposes, then you yourselves will be liable for your profit, your loss, or loss of profit. And rest of the disclaimer you can just read here on screen. With the legalities out of the way, let me give you a quick introduction about who I am and about my work. So my name is Nirav Yadav, and I am the admin and owner of 50eyes.com, which is the website which I use to share my views online regarding trading and analysis of various different markets, including but not limited to Forex, commodities, crypto, indices, stocks. Basically, I cover all the major markets around the globe, and I am a trader primarily. My area of expertise is Elliott Wave analysis, or advanced Elliott Wave, as I would like to say. Further on, I like to point out that this webinar is broadcasted live on both TradingView as well as YouTube. So you can view it wherever you prefer to view it. If you want to check the recording later on, you can go in onto my YouTube channel called 50 Eyes Market Analysis and subscribe it obviously for further content, and click on live over here. And in the live section, you will find this as the 18th webinar, because this is the 18th in the series of the trading opportunities webinars that I have been conducting for quite some time. If you are not familiar, then these webinars are conducted every week on Monday, Wednesday, and Friday, and they are conducted at 2 p.m. GMT. Okay, so this is the time you need to join in live if you want to catch the best trading opportunities live as they are happening, because many times we talk about trades and they are finished in a few hours after we have discussed them. So it is best if you join live. That's why they are connected as live webinars and not as a recording. So further on, discussing about my work, I am also the author of the book called Think with the Markets: Secrets to Achieve 80% plus accuracy using Elliott Wave. It is available on Amazon's Kindle platform. You can just buy the ebook, and it will be available for instant reading on your phone, tablet, or computer, whatever you are using. And most importantly and lastly, this is a track record of all my analysis that I have done for the last 6 years plus. So in 2016, as you can see, I had an accuracy of 83.34. 2017 is 87.5. 2018 is 84.61. 2019 84.88. 2020 is 88.52. 2021 82.22. 2022 is not yet compiled, but As you can see in the sequence, this is a track record of 6 years, and my accuracy has remained higher than 80%. And I'm pointing this out to show you that in this industry where even 60% plus is considered very high, I have maintained above all industry standards accuracy, which is going as near as 90%, just to show that I'm an expert in whatever I'm talking about here. So that was for the quick introduction here. And yeah, lastly, before we leave, other than the book, I also have a video course on Elliott Wave. I also run personal classes. So if you are interested in learning personally from me, you can contact me via my website's contact us page. Now let's run down how we'll proceed with the webinar. So the way we'll proceed with the webinar is Euro USD, EURCAD, followed by USDJPY, EUROJPY, crude oil, gold, S&P's 500, Nifty, and at the end we'll discuss Bitcoin or have a quick look at it. So these are all the charts which we will be discussing. And if you have any doubts in any of the charts, once I've done my discussion, then you can post that in the comment section. I'll have a look at it and revert back to you guys. Okay, this is the way we will proceed. First, I'll discuss the chart, then I'll ask if you have any doubts. You can then post in the comment section, or you can type in clear in case you understood whatever I'm discussing. So with this sequence, let's begin this 18th webinar, right? And first chart, as you can see on screen, is Euro USD. Nikos is saying, sounds okay. Please check EURCAD ready for sell. Yes, of course, EURCAD has already triggered the sell. I got the alert yesterday. So anyways, we'll look at it after Euro USD. So first things first, Euro USD, we are following the count that it is going up, possibly inside a corrective structure. And the corrective structure we are looking for, or we are of the view that has happened here is of a triple zigzag. The way triple zigzags proceed is that, by the way, if you guys are not familiar with the lead wave, do not worry, just follow along. I'll discuss the basics as well over here. So the way the corrective structures will work is the first leg up is called a W. It will have this type of a structure: A leg up, correction down, and C leg up. So this is what we call a W, which is followed by a Y and followed by a Z. All three of these waves are joined by connecting wave X. So this is the W, Y, and Z. All three are joined by the connecting wave X, the connecting wave X. So this is the way these structures proceed. And in this particular case, on this chart, the count has remained this, right? So once this WXYZ progression is complete, we expect the market to give a sell-off. Now the thing that is happening over here is this market has remained stuck in the sideways range. And if you recall, based on that, I was also proposing that probably this market is following something else and we will have to update these counts, but I have not updated yet. And the reason is that even if this market is following the alternate view, which I'm not discussing right now to keep things simple, it is still going to, or we still expect it to give at least one leg down, which is in the sequence of a zigzag. So basically, what I'm saying is that even if it is following the alternate count, we are expecting this market from this point of reference to give us something like this. Right? So the first leg down would be in this case A, and the correction will be called the B, and the leg down will be C. This is what we are expecting. This will be a zigzag pattern. However, so far it has sort of moved that way, but we would like to see a little bit more convincing movement for the C. It's not like the market has to do whatever we think it has to do, but that's just the basic idea I am following through. So based on that, I'm looking for selling opportunities on this counter. But as I said, there is a alternate bullish view as well here, so I will be cautious with the sales, and for now I have not initiated any short positions over here. So still a wait and watch on your USD with the current scenario in mind, that is possible sell-off on this counter is expected. And secondly, the important thing that we will consider this view as relegated or removed or not playing out if the market goes near the last high of 1.07327. So simple enough count here, expecting short-term sell-off on this counter like this, and we have the invalidation levels. Nothing more to add over here on Euro USD. So next chart which we'll discuss is the chart of EURCAD. By the way, guys, if you understood whatever we are discussing over here on Euro USD, I would appreciate if you can type in clear or understood or something in the comment section so that I know that we are all on the same page. And in the meantime, I'll just load the chart of EURCAD here. which by the way is triggering this short side signal at least. Thank you, Abhishek, for the clarification. Let's move ahead with the EURCAD here. So EURCAD, by the way, guys, if you recall, we had an alert placed somewhere here or a little bit lower. I can't recall exactly because let me just tell you first what the analysis is instead of going with the alert. So the analysis is suggestive that from this point of reference is at the price level of 1.32690. We have a possible zigzag enter formation, and the possible zigzag, I have counted this as the first leg up, the correction down, and the next leg up. So ABC marks the completion of a zigzag, but then there had been a counter view that originated because of the fact that this price action looked very weak. So previously, our analysis suggested that once this trend line was broken, we expected sell off on this counter, right? But because there was sell off, but it was very weak, I said that there is a possibility that this might be following an impulsive structure in the other direction. Based on that, I suggested that even though shorts will happen here, they will not be very strong, and I was not interested in selling this market. So the targets we came up with was 1.4385, and the second target was 1.42641. So this market is still open for the second target, but I still feel that this market is giving a very slow correction, and I will be staying out of this. From a technical standpoint, it is a short. It has achieved our target minimum. So if somebody was able to catch it, I don't even think it was a very profitable sell, by the way, because even if you could have caught it at the channel break, only this much movement was really something you could have tried to capture. So practically speaking, you couldn't even have captured that much. So anyways, uh, maybe a 1:1 trade you could have formed here, but as I said, I'm not interested in this small of a position. But anyways, let me quickly check. So yeah, it was a 1:1 trade. So it was a scalp kind of trade, which is the expectation from a small movement anyways. So coming back to the point, it is technically still a short. The second target is still open, which is the target to here. And the level for that is 1.42663. And as I said, even though it is still open, I'm not particularly interested in it. Of course, I can do some short-term analysis on this one, but it's not that useful at this point in time. It looks to be following a zigzag kind of correction. It could turn into a double zigzag and perhaps touch the lower targets, but I'll just avoid this counter for now, unless I see somewhat of a very strong fall from the current levels. Maybe then that would interest me. So as such, I'll avoid selling this for now at least, and just remain alert on this counter. That was my quick take on EURCAD. It is following our plan, but not everything that works is what we will trade. We also look for favorable scenarios. So nothing more to add. I'll just wait for a few seconds. If you guys are clear, you can just type in understood or something in the comment section. Nikoshi, Abhishek, and Madhavji, you can just clarify your take on this chart before we move on to the next chart, which will be the chart of USDJPY. Let me quickly check one thing here before we move on to that chart. So it looks like the chat section is not working on the tab I have opened up. So it's a regular problem with TradingView. Sometimes their comments don't load up. So anyways, I have opened up an incognito for checking out if there are any comments. I'll catch them. So now moving ahead with the chart of USDJPY, let me quickly load that on screen. So as you can see on the screen, we have the chart of USDJPY here, and it is still following our previously discussed count here, right? And previously what we discussed was, let me quickly switch back. Yeah, previously what we discussed was that first of all, we were expecting that this market has most likely completed the downward movement with the wave Z over here. Second thing which we discussed was that there was not 100% certainty on the fact that if this wave Z is complete here or it has one more leg down remaining, right? Based on that, I said that although it looks like the Z is complete, we still should wait and watch to see if the market continues down. And most importantly, this price action was not the strongest, right? Now, on taking this new look or relook at this chart, what I feel like is that it has gone quite up, right? So, what could be happening at this point is that it might be still forming the Z, right? It might still be forming the Z in the sense that this first leg down might be the A wave, this could be the B wave, and would be followed by a C wave. So, what I'm really talking about here is a zigzag correction. So, if you are not familiar with the lead wave, I'll just quickly outline what I'm really talking about. So, just focus on the chart from this point of reference, which is around 138.153 or 153, 138.153. So, what I'm saying is that from this price point or point of reference, we should see something like this, right? Or I'll just draw it parallel to the actual price. This will be what you call a standard zigzag progression. Okay, so as I said, it could be because this is not the clearest possible count here on screen. So it could be the case that the zigzag has already ended the wave Z over here, or it could be that this is just the first leg down. Because the zigzag will have an A down, a B up, and a C down. This could be the B up and could be followed by the C down. So as I said, we don't really have a confirmation. So that's why I placed an alert about, I should actually move it there. So I have placed an alert for it around the price level of 131.874. So that is the price level where I would be interested in looking at this market for possible shorts for the possible wave C down progression. Secondly, the reversal generally would happen around the 50-60 retracement zone. So around this white box, which I have already, not already, which I have just drawn in front of you guys. So basically what I'm suggesting is that from this white box around 134.371 to 135.30, we can expect the market to reverse. It is already touching it, right? And most importantly, the red trend line is also incoming over here. So it can act as a good reversal or possible reversal here. So USDJPY, basically, long story short, is still a little bit unclear, still a little bit uncertain if it's going to fall down from here or it's going to go straight up. Keep in mind, if the Z is complete over here, then basically over here, then we expect the market to take off, break this trend line and go higher. So in that sense, this trend line will also act as our important level. Exiting the channel is placed as an alert right now here, as you can see. And if the market goes higher than this channel and takes support over it, something like this, then I'll be interested in going long above this price level. You're getting my point? I'm just discussing the rough price action plan. Of course, the market is not supposed to do or follow it precisely. But that's my take on USDJPY. Still a wait and watch with clearly defined strategies on both ends. Alert on downside and channel break on upside. I'll just take a few seconds here and see if you guys have anything to say about this chart or any doubts or queries basically. If not, just type in clear understood something in the comment section. And if you have not already hit the like button on YouTube and the rocket button on TradingView, please do so. That helps the YouTube algorithm as well as possibly the TradingView algorithm push the content higher, and other people will know that this content was useful to you, so it might be useful to them. That is most important. Please do so if you haven't done that already. Next chart will be the chart of EURJPY. So it looks like EURJPY is not really following the wave 4 progression which we expected to follow in the last webinar. So I'll just quickly outline what we were thinking about EURJPY in the last webinar. So we were saying in the last webinar that this is a possible wave 4, and if this wave 4 really completes here, then we should see a break below this red channel, and a break below this red channel would suggest a possible sell-off in this counter, right? So it never triggered our shorts. It never broke below the red channel. As a matter of fact, it's still propagating inside of it. So that basically suggests that possibly this market is doing something else. Or let me just quickly check a few things before I make further comments here. Okay, so as such, it is not really following our plan precisely, but the uncertainty still prevails. The generalized target for wave 4 is 38.2 retracement. So let me just quickly tell you what I'm saying. What I'm proposing is that, or what we expected basically was that this was a 4 and this will be a, this was a 3 by the way, and this will be a 4, and there will be a possible reversal for the 5th. This is what you call an idealized impulsive structure for downward wave in the Elliott wave terminologies. So this was our expectation. Now, based on the current outlook, it looks like this market is doing something else. Now, let's quickly have a bigger picture perspective and update our view on this chart. So the downside is still open again here, not as the wave 4 we were expecting, but there is this another expectation or another what do you call count which we had not checked in the last webinar, which was that it is possible this wave 2 is still continuing. So let me quickly remove this and remove all this count and just tell you what I'm talking about. So in EURJPY, from a bigger picture perspective on the time of 21st October 2022, price 148.38 is our point of reference, right? So from here on, we expected that there was a leading diagonal in the downward direction, right? After this leading diagonal, we expected that this was the possible wave 1 down complete. This was a possible wave 2. And what I expect is that after this wave 2, we expect that the market would go down. Now, what I'm proposing at this point is the possible updation that maybe this wave 2 is still continuing. So in the sense, I'm saying this wave 2 is possibly going up and then down and then up again. So this will be the proposition of a flat kind of correction in this specific case, possibly a running flat, right? So what will happen in a running flat scenario is that once this 2 is complete here, by the way, running flat will look something like this. The first leg will be called an A up, second a B down, A up, B down, and C up, and C up. So this is what we will call a running flat. So in this case, if this is a running flat, we again, as I said, we do not have the confirmation yet. Then we expect the market to again follow through the downside movement. One second, let me get rid of this. Okay, so once again, as I said, once this C wave is complete, this C wave, we will call that the wave 2 is also complete. And once that happens, the 3 wave or third wave will go in the downward direction. So in that case, what we expect is that, or what I should say, we think is that possibly the downward movement is still remaining. Again, just like USDJPY, we have to wait and watch here. We do not have the confirmation neither for upside nor downside. But because downside is still open, and because our primary view on USDJPY is also that probably the downside is open, I'll wait for it to give me some sort of signal for the bearishness, possibly. Right? It's not like I'm hell bent on selling this thing, but my current view suggests that it would be better to wait for the sell signal here. Of course, if something else like unexpectedly happens where there's a strong up move or something like that, then we will reanalyze the situation. But nothing has happened thus far of that scene. So in that case, I'll just leave this, what do you call, trend line over here. This trend line, by the way, is also an alert if the channel is broken to the downside, or if the market is breaking the channel on either sides, I'll get an alert, and based on that, I'll further form my strategy. Just probably should expand it a bit. If you guys have any doubts or any queries here, you can just type that in the comment section. I'll wait a few seconds here. By the way, guys, if you are understanding whatever we are discussing here, please type in clear. That also lets me know that everybody is on the same page. So next chart which we'll be discussing will be the chart of CL, crude oil, followed by gold. So we are now in the commodities part of the webinar. Let me quickly load that up on screen for you guys. Right. So there's the chart of crude oil or CL. Thank you, Abhishek, for the clarification for your video, and video content is really awesome. Thank you, and you're enjoying it. That's nice to know. Of course, Abhishek, make sure you share it in at least 2-3 of your circles. If you have a trading group on WhatsApp, Telegram, or Discord, or whatever you are using, share it there. If not, then share it on your Twitter, tag me or something like that. We definitely need to reach a lot more people. That's why I'm doing this webinar, to increase my reach, and your contributions like sharing, etc. will help a lot. That's my request to you guys, not just Abhishek, to anybody who is watching this content and liking it. So now let's get back to our webinar discussion. Crude oil, it's so far following the count as we discussed. So let me just quickly clarify what is the discussion we have on CL futures. This is, by the way, not the futures chart. This is the O&A data feed. The futures has a small price difference. Let's just quickly check that. Currently, O&A is at 79.532, and this is the futures at 79.43. So I'm just sharing it to you guys so that you know that generally there is a small price difference between these things. So when I say a particular price level, do not take it as it is. Do keep in mind these things are having a small difference. Okay, so let's get ahead with our discussion. So from this point of reference on CL or crude oil, price level around 70.356, we are expecting, or we were expecting, a possible diagonal formation here, right? Now the characteristic traits of a diagonal would be that, one second. By the way, guys, if you guys are not following these webinars regularly, I like to point out that we were able to catch this last leg up, right? And we were able to catch it because we had strategized it like 7 days ago, or maybe even 14 days ago. You should check the webinars. We have been talking about this leg for quite some time, and we were able to catch it. So that's one of the important reasons why I ask you guys to follow these webinars live. Every week I go live on Monday, Wednesday, and Friday at 2 p.m. GMT. So if you want to catch these strategies beforehand, then definitely you need to join live on 2 p.m. GMT, Monday, Wednesday, and Friday. And just also to remind you, we have caught 8 plus trades in the last 2 weeks itself. So in the last 2 weeks, we have done 6 webinars. So no, by the way, it will be 7th, 8th. So I'm talking about the last to last week and last week. So we have done 6 webinars and we have got 8 plus trades. And you can just check the webinars and you will see me talking about which trade we caught and whatnot. Many of them were quite big moves, including the S&P, the gold up leg, the euro up leg, by the way, and so on and so forth. So now getting back again to our current discussion, right? So CL1 futures, because the diagonal formation is basically a formation which is wedge kind of a pattern if you are going to talk in price action type terminologies. But in this diagonal formation in Elliott Wave terminologies, we have a few specific guidelines, or what do you say, rules. And in that case, let me just clarify what a diagonal pattern would look like, roughly speaking. So the diagonal pattern should look like this, right? The first leg is called a wave 1. The down leg is called a 2. The next leg is called a 3. And then the fourth leg will overlap the price territory of 1, right? That's the characteristic trade of a diagonal, followed by the fifth up. So in this particular case, if you look on the actual price, this is the 1 up, 2 down, 3 up, 4 down, and then this is the fifth up, right? So you can see there is an overlap, very clear overlap between the 1 and the 4. So this also suggests that possibly the diagonal is complete, right? So if the diagonal is complete, then we expect the market to move down, but because we have higher targets which are still not touched. So let me just remove this clutter and tell you what I'm talking about. So keep in mind, guys, this was the target minimum, 79.249. So the market has touched it, 79.249. Where is that? Yeah, somewhere here. The market has touched this target, but it was a very small target. Our next immediate targets were this white box, resistance box, right? So since the market has not really gone and even touched that level, there is a possibility that this count may evolve and still have some upside remaining. So basically what I'm saying is that the first most certain thing which we had, the upward move as a possible diagonal, is already complete. Okay, it being complete means that we have achieved our first target to the upside. That's well and good. If you were able to catch it, that's good. But at the same time, I'm saying that we do not have confirmation for complete bearishness. So confirmation for complete bearishness we do not have, because there are higher targets which can also be touched, right? And we have not touched them. So that's why I'll just wait and watch on this counter for now. However, it is possible that this market has completely completed the flat correction which we were following. So by the way, if you are not again following these webinars, you might not understand a few points. So if the flat correction is complete here, I'll just quickly summarize what I'm talking about. If the flat correction is complete here, then this market should head straight down and go lower than 70.290, basically the last low. However, if the flat correction is still continuing and this market goes into the uh, resistance zone of this box, then the market will reverse from the box once it does that. And then the market will break lower than 70.33, whatever this last low is, basically, right? So basically, the projection for this market is either straight down, or one second, let me just change the colors. Yeah, so the projection is either straight down or some upside and then down. So as such, as I said, we do not have the confirmation for selling it yet. So I'll just place an alert here. I'll become interested in forming short side scenarios if the market goes below 77.175. As I said, this alert is not a sell alert. This is just an alert for me to recheck the chart, right? So crude oil, our bias is wait and watch with the shorts in mind, right? Or if you were long, you should have already exited, because we discussed that in the last webinar that we were already at our expected upside target. So that's our take on crude oil. Longs should book out at this point in time, and we wait for a clear confirmation in shorts. And by the way, one more point that I just see here is that generally we want the market to take out the trend line and then take resistance on it, and it is sort of doing that. It has gone below this orange trend line and it is trying to take a resistance over here. So let's see how it proceeds, right? It is too early to say anything, but generally that's a good sign. If you are looking for selling, even if I am looking to sell this market, this retest is generally good for new shorts. These are the few points I had in mind on crude oil. I'll wait a few seconds. If you guys have any doubts, you can just type them in the comment section. Last chart we will discuss is gold, followed by S&P's 500, followed by Nifty 50, followed by a quick look at Bitcoin or BTC. Sure. Thank you for your report. Okay, thanks, Abhishek. And are you able to show S&P projection, Jalman? We always discuss S&P. This will be the second chart from now, so you have to wait a while for S&P. Shruti is saying, hi, the TradingView link mentioned in YouTube description directing us to TradingView main page, not to your page in TradingView. Kindly have a check. Okay, Shruti, I'll do that. I'll probably make it to my profile or remove it. It's yeah, I think I should remove it. It's been there for many years, I think. Need to do some SEO stuff. So anyways, guys, if you guys are clear on the WTI crude oil chart, I would appreciate if you can type in clear in the comment section. TradingView, YouTube, wherever you are watching this webinar. And if you have just joined in and you have not yet clicked the like button on YouTube or the rocket button on TradingView, then why not? Are you not enjoying it? Please hit it. That helps me reach more people. Okay, guys, so let me just load on quickly the chart of gold. So the chart of gold is on screen following our strategy thus far quite well. So what I see on the chart of gold so far, or let's just quickly discuss what I have what I had as the analysis going on. So in the last webinar, which was done by the way on Monday, 26th of December 2022, at the same time. So let's check quickly. One second, let me just check one thing here. 26th, right? So 26th. And how is it not showing the date? Well, that's weird. December 26th. Today is 28th. So I'll just pull the thing itself out. So this is the last webinar which we did. Let me mute the audio. Gold was discussed at 2744 in live market. So let me see what was the price and everything. So by the way, this is the recording for the last webinar, 17th trading opportunities webinar. I'm just showing it to you to see what was the price level and everything. So at that point in time, the price was 1797.67. Okay, so closed session. That's why it's not showing the dates. Sorry about that. But anyways, the price at our point of discussion was 1797.67, which is what we need to note. By the way, these recordings are available both on YouTube as well as my TradingView profile. Generally, TradingView loads or does the encoding very fast. So if you want to rewatch the webinar, TradingView videos will not pause buffering. But if you rewatch the webinar right after it completes on YouTube, the video buffers a lot. So my suggestion is you gotta follow me on TradingView and check the recordings there, because they have that software thing set up well, or server or whatever thing that is. So anyways, coming back to the chart of gold, our discussion basically was that and yeah, one more last thing, my TradingView profile is basically my full name, Nirav Yadav, NEERAVYADAV. So you can just type it in and figure out yourselves, or you can just also find my TradingView link on my website. Whichever page you visit on my website, this link is follow on TradingView is the TradingView link. Now getting back ahead with the discussion on gold. So as you can see in the last webinar, we had the count suggesting upward movement for wave 5. If you were not able to watch the last webinar live, you can obviously watch this recording. The link is available on YouTube. So basically the analysis was that this market will go up for this fifth wave is what we were thinking. Probably if I just play this webinar, yeah, as you can see, this is the this is what I drew, yeah, right now. So you get the point. This is the 3, this is the 4, and we were expecting this will go up. So I'll just remove this last webinar recording now from screen. So that is what we were thinking in the last update. And now let's see what happened on the actual chart. So on this actual chart, as you can see, this was our wave 1, this was our wave 2, right? This is our wave 3, this is our wave 4, and 1797.67 is where we suggested that more upside can be seen or should be seen. And this market has gone ahead and taken out the last high, which was the minimum target. So minimum target was above 1826. So our minimum target was 1826 plus. So we suggested it at 1797.67, let's say 98 for the sake of convenience. And it has gone 26 plus to 28 points basically, right? So 28 points is not a small thing if you are familiar with the contract size of gold and how it is traded. If you trade gold, by the way, you should be familiar with the contract sizes. It's a huge move. So if you were able to catch it, I would appreciate if you can let other people know in the comment section. If not, then keep in mind you need to attend these webinars live every week when I go live on Monday, Wednesday, Friday at 2 p.m. GMT, so that you are able to capture these opportunities. So long story short, we were able to catch this long move, right? From 1798 to 1826, right? And now let's check the count right now. So the count right now is suggestive that a possible correction can be seen here, right? So let me just remove these things from chart and just talk very minimalistically, because just keep in mind, guys, one more thing, quick thing here. The things I discuss are formed after many hours of analysis, and a lot of work goes into coming up with these analysis. For instance, you can see I have gold here and gold here also. Plus, I have gold again opened up on another window on another screen. I have multiple displays, by the way, if you haven't guessed that already. So I am discussing to you what I'm discussing after analyzing multiple different possibilities. And I'm only discussing the part which is most relevant. So hours and hours of analysis goes into it. Excuse me. Hours and hours of analysis go into it. So I would appreciate if you can share this content after you have watched it, after this webinar is finished, and also hit the likes on whichever platform you are currently viewing it. So coming back to the analysis, if the diagonal is complete, we expect a downside movement. We would want to see a move below this trend line, below this orange trend line, right? Once we see a move below this orange trend line, the most supreme kind of setup for sell over here would be a move below this orange trend line followed by a corrective move, taking a resistance back at the trend line, and then a move again in the downward direction. At that point, this level will act as a sell level or a sell trigger. So this is the most idealistic setup which I have discussed. It may work out, it may not, but it's my job to discuss possibilities here, right? So this is the most idealistic possibility we need to keep in mind. More aggressive approaches will include ending shorts right away with the stop losses at the last high. I'm not interested in that, because even though sell setup looks convenient at this point, this market might be doing something else. The bullish scenarios have not completely been relegated. So in short, I'm saying that it is possible that this market can go much higher from the current levels, and what we were able to capture was only a small part, maybe, right? So as such, short term wise, I'll be interested in some sell-offs, but I'll most likely keep them intraday, because it is possible that more upside can be seen. Possibly it will give something like this and then fly high again. That's again a possibility. Secondary possibility involves much more downward movement, but anyways, we are not really interested at this point. We don't have to decide everything at the get-go. So that was my detailed outlook on gold. We discussed that more upside can be seen, but currently we wait for this important trend line, which I shall place an alert at. Okay, so that was my take on gold. If you guys have any doubts, you can post them in the current section. If you are understanding whatever we are discussing here, please type in clear or understood in the comment section. Next chart will be the chart of S&P 500 followed by Nifty 50 and followed by BTC. So, what's your take, Abhishek? Were you able to understand it? What about you, Jalmat, Shruti, Madhavji? and Nikosi. Tanuraj is asking for Nifty. Dread Mekay is saying thank you. Yeah, Tarun, as I said, we'll cover Nifty after S&P. So let's quickly load S&P on the chart. Okay, very interesting. Interesting moves. So far it is following the plan. Let's have a quick revisit at what we are thinking on this counter. All right. So my take on S&P has been that we are expecting... yeah, Tarun, we are not interested in your view here. Please don't type in comments like this, cross that. Just post questions if you have any doubts on the charts we discuss. Comments like it will do this and do that mean nothing. This is trading. Anything can happen here. So getting back to our analysis of S&P, what we have going over here is, by the way, guys, if you are not following, I'll just like to point back again. S&P so far, we were able to catch this break to the downside, right? So I'm just pointing it out to show you guys why you need to attend these webinars regularly, right? We were able to catch this break at 39.52, right? The whole way down, literally the whole way down, we were able to capture it till then. And after that, we were able to capture this leg as well, right? So this 13.952 to what is this? 37.90, but let's just say 37.83 for the sake of convenience. Or just say 37.82 for the sake of calculation. So 150 plus points move, right? We were able to capture it on live market, in live webinars, in these webinar series. And I had some free time, so I decided to cut this part out and I posted it as a video here, by the way. So you can check whatever I'm saying. If you don't want to check the whole webinars, you can just check the part of it which is posted as a video over here, right? So again, one of the reasons why I say you need to follow these webinars live, and you need to join me every week when I go live at 2 p.m. GMT, Monday, Wednesdays, and Fridays. Enough of me marketing my own free webinars. Getting back to our analysis here, right? And I have to push these free webinars as well, right? People pay a lot of money for subscription services which share content like this. Anyways, so what we are discussing in S&P so far is my understanding suggests that we are possibly in a sideways correction from this point of reference. More specifically, I'm thinking maybe it's a triangle. It could be a more complex correction. Of course, everything is possible, right? And what I think is that if it's a triangle, it should move like this. And if you are not familiar with the Elliott Wave terminology triangles, then it will have 5 waves called A, B, C, D, and E. And we currently seem to be inside the wave D. Right? It's rather self-explanatory, but I'll just draw some lines over here to show you guys. So this is our point of reference. This box, which is at the price level of 37.78, dated 28th December 2022. From this point, we expect that this will be the A, there will be a B, there will be a C, a D, and then a E, right? So if that is the expectation, then in alignment with that, we should see a leg down. So basically that quickly makes me think that I should place an alert over here. Once this alert is triggered on the downside, I will be interested in shorts. So as you see, we just have figured out a possible short selling opportunity here. Again, standard disclaimers applied. If you have joined the webinar later on, keep in mind, I'm not taking responsibility for your trades, and check the disclaimer at the beginning. So my perspective at this point is that I will be interested in selling for this leg down because it has followed our counts really well thus far. Of course, if something changes, we will have a stop loss placed. Let's say if the market moves as I'm expecting down from, let's say, just from the current level, then we will have our stop loss placed here. So that is a proper sell setup here. Next thing is that it never triggers our sell, then we will know that something else is going on and I will update the counts. So again, nothing to worry about there as well. So S&P 500, very clear setup here. We expect downward movement below the price level of 38.24, which should take it lower than 37.94. So let's say 37.93 something. Roughly speaking, we don't need exact targets here. Targets are not that important when we are catching these small moves. What is more important is that you get out with your profits before the market reverses. So anyways, that's my quick take on S&P and the quick sell setup which we just discussed. And next will be the chart of Nifty 50 here. Okay, so if you guys have any doubts on S&P, I think it's very clear, by the way, but still, if you have any doubts, you can just post them in the comment section and I'll take a look at it. I'll wait a few seconds here before I load up the chart of Nifty. And as I say so many times, if you are understanding whatever we're discussing, you gotta type in clear or understood in the comment section. Also hit the like button if you have not done that already. Trading View or YouTube, wherever you are live, just hit the like button. That is very important for the algorithms of these respective platforms. Thing here. What happened? Are you guys not able to hear me? Abhishek, Shruti, Dre McDay, and Madhavji, I'm not seeing your comments here. Or is it that the comments are just not loading up? Yeah, Dre, do keep typing in clear. That's the flow of the things. If you guys don't type in anything, I don't know if I'm even live or not. Right? Okay, so now let's head over to the chart of Nifty's 50 here on the screen. You have the, let's go to 15 minutes. The hell. So the minute kind of error I'm seeing, not error, kind of issue here is, if you guys remember the last time when we discussed this chart, my view was that it will possibly go sideways and then down or straight down, right? And the secondary view was that if it takes out, what was that level? 1 second, let me check quickly. 2 and 1, 2, 3, 4. I'm not sure what the exact level I suggested, but there was a level. If it had taken it to the upside, I would go long. It took it to the upside, and I have traded multiple longs on this counter since then. Now, obviously, I took the trades, and it has been profitable sessions. But the issue I'm seeing over here is that it is not in alignment with the global markets, which is S&P 500. So if S&P is following our counts and is still bearish on the shorter to swing trade perspective, then how is it that Nifty can sustain such upside movements? So something's got to give here. Either Nifty is following a trend of its own, completely out of touch with the global markets, or it will soon come in alignment with the S&P's movement, right? Or maybe, who knows, we are completely wrong on the S&P. So we'll see. So right now what I'm thinking is, the problem is that there are, not problem, the thing is that there are too many possibilities here which are outside the scope of discussion of such a public webinar. It will probably take an hour or so to discuss everything. So let me see what points I can give you that can help you. So I can think of, I'll just disregard everything on the longer time frame, which will take much more time to explain. So what I see on the shorter time frame is interesting itself. So first of all, this was the first resistance of the day, 18,171. It literally reversed from it, like literally, right? Second resistance for tomorrow is 18,196. Let's just say 18,200. It's actually 18,196, 197 something, not really 200 on the spot market, right? So because it has not taken out the second resistance, which it generally does in my observation if it's a strong trend. So two things are possible. If the trend is still to the upside, it will or it should take out 18200 or at least touch it, right? If the trend is up, of course, it will take out the resistances. That's just the general understanding of any market for that matter, right? So my take is that I will observe this counter tomorrow, right? And from this point of reference, I'm expecting this market to form a flat kind of pattern. So I'm just discussing this market from this point, right? Which is the price level around 18135. So I think it is doing something like this: A leg down, a B leg up, and then a possible C leg down. So if it is really doing something like this, then once this progression is complete, we will expect upside movement, right? Now, as I said, this C leg has not really clarified itself completely. Generally, is the case with this big breaks. I mean, basically, we stopped trading around 3:30 p.m. IST. So, but S&P is trading 24/7, more or less. So these big breaks, I can just analyze the SGX, but let's just do it with spot itself and not keep things simple. So my take is that we need to analyze this particular movement in tomorrow's session. I expect that it can go a little bit more lower, and once it completes this downside movement, I will go and analyze the internals of the structure, and I expect this to be forming a possible impulse in the downward direction. If it really is doing that, then there are the simplistic setups. And there is the simplistic setup which suggests that C wave will have 5 waves inside of it. Hence, based on that, we can just count the internal 5 waves of the structure and look for longs once the 5 are complete. Again, it's a bit of a risky situation here because the secondary view here will be that if this market gets in alignment with S&P, that is, let's say S&P starts downward movement a little bit earlier than expected, then it's possible that Nifty gets in alignment with it, and then it can even fall straight down. So it's a tricky situation. Cannot comment too much, but personally, I think one leg up is still due on this counter. I have discussed the target as 18200, not really 200, 18197 basically, right? And the progression I have discussed is just like this, which I just told you guys, right? Some more downside before it moves up. So that's my take on Nifty. Still, comments should not see come down below 17,773. And C is not really supposed to do anything, right? Wave C can be a wave in 1 second here. So SGX is at 18 to 51.5. So it's already gone up, right? So it has already taken out my target, right? 18197 has already been done. So it's a gap up tomorrow. So see, whatever you are writing here, 17.7, whatever, it's all invalidated itself. The markets are not supposed to do anything, which you think, it seems. Anyways, so guys, jokes aside, focusing back on the actual chart. So because the market has on SGX has already taken out the high, so I'm updating my count right here again on a closed market because I don't trade the SGX. So that means the C is already complete. So that means our count was correct and this market has gone up. Now, how long will it continue going up? Now, that's another discussion. Generally, you can just take this leg up and then project it from the low, and you can mark out 2 levels. I'll just do it right away. But that's just one of the ways and not even the kind of thing I like to do. So again, based on this rough, quick thing, we can say that these are our targets, right? There are so many of them. So, but that's how the things are going to be. Right. So these are the quick upside targets. You get the point. Above 197, which was my expected target. It is 18 to 41, 18 to 84, and 18 325. Right. So how I'm gonna play it now is that I think tomorrow, if it opens gap up, there might be some profit booking, and then we'll have to form some strategies based on the structure at that point in time. I am personally not very happy with this corrective looking upward movement. So I'll stay a bit cautious, but I think tomorrow, if there's a gap up in the opening session and if it forms a reversal, we might get a good long setup. That is, if the market opens somewhere and then there's a profit booking, then this level, the highs might act as a long setup. So that's my take on Nifty's 50. Pretty lengthy discussion for something we didn't even know something about. So what's your comments, guys? Did you understand whatever I was saying? Shruti, Abhishek, Madhavji, Tarun Raj. So what's your take here? If you guys understood it, we can move on to our last chart, which is a quick look at BTC before closing the discussions. Okay, Abhishek, nice to know. And Dre McDay, not sure what your whole name is. Dre, is your name Drea? MC sounds like a middle name. Okay, let's move ahead with the last chart. Last chart is of BTC, and as I've said so many times, downside is still open. This market is just propagating sideways. Okay, Andrea. So this market is good to know. I think you have sent me an email as well for inquiry about the classes. I'm just guessing. So anyways, getting back to our chart on BTC. So the discussion here is the same. Literally nothing new to add here. So the discussion so far has been that because there is a zigzag correction complete in the other direction, from this point of reference, I have said so many times that we expect that the downside is open and this market can fall literally from the current price levels, that is from here itself, or it can just go for one more leg up and then fall. So downside is still open. There is no, what do you call, other view I have. The only time I will change my view here is if this market takes out this high around 21,300, basically this high. You can check on your chart what the exact level is. If it takes out this high without making a new low, then we will have to reevaluate our situation and consider different possibilities. But until it does that, market is open for more downside. We have discussed downside targets way too many times again, but you can see that these are represented by the purple lines at 15 to 40 and lower one at 14,790 something, right? So BTC, as I said, real simple, following whatever we have discussed. And with that, our analysis and discussions have come to an end. If you have enjoyed it and have forgotten to hit the like button, then kindly do so. It helps me get bigger reach. It helps TradingView and YouTube understand that the content was useful to you. And most importantly, make sure you share the content in your circles. That is on if you have a Discord channel, if you have a Telegram channel, whatever you use, make sure you share this with your friends and colleagues, people who might find it useful, right? And lastly, again, my courses are available here, Elliott Wave video course and my personal classes. You can send inquiries. If you are interested, I have also written a book on the subject matter of Elliott Wave called Think with the Markets. You can check it on Amazon. Links are also available here if you don't want to type the name of the book in the search. Okay, that was all from me, guys. Hope you enjoyed the content and I really hope you share it in your circles. Try sharing it at least 3 circles. That will really help me get more views. Okay, guys. I will see you guys in the next webinar.